Hey there, welcome aboard. It's Walter here. Glad to have you here. And we're going to talk about trading again. And as you probably know, if you've been to these videos before, you know that there are three things, and only three things that we can do to improve our trading. Number one, we can choose a system that has a positive expectancy, and we can work that all out with the expectancy formula. Number two, we can adjust the risk parameters so that we can achieve our goals, our stated goals. The stated goal is usually to make it a certain percentage, a certain amount of money. The unstated goal, which is often forgotten, unfortunately, is to avoid a certain amount of drawdown, which is what I'm going to talk about today. So we're really kind of talking about number two today, which is the risk parameters. And then the third part is your thinking and the way that your psychology and how that interacts with your trading system and your random sequence of wins and losses. So let's talk about this second piece here. Sorry if my voice is a little bit weird. I'm getting over a bit of a cold, but hopefully my editor can do some magic with that. So anyway, and hi, welcome to those of you watching the recording as well. If this kind of stuff interests you, you might be interested in the Small Account Big Profits course, link above or below this video. Now, what do I mean by your risk rules, and how do we know if we're going to trade a system forever or for life? A really simple way to do this is to, when you test your strategy, first of all, when you test your strategy, you should put it away for a while. What I mean by that is we often come up with new strategies. We test them. I like to use Forex Tester. You might use whatever you use, whatever tools you use, and then you go, oh yeah, I'm gonna trade it live, next week or whatever. That can be a little bit tricky, because what will often happen is you will end up trading a system that you haven't verified, and also it's easy to add too much risk to it. So what I'm going to suggest to you is when you find a strategy, you put it away for a while and then bring it out later, maybe 2 or 3 months later, and then start to really dive into it and maybe go demo live, which is forward testing, before you actually go with a small trading account. Now, what you really want to do to get a handle of what kind of strategy this is figure out this. How often do you have a drawdown of X percent or X amount? And really the way to do this is to use R. R is the amount at risk. So what you want to do is have a constant lot size or constant risk on every trade. What I mean by that is $1,000 on every trade, $500 on every trade when you do your back testing. And then what you'll find is that there's going to be a distribution of wins and losses, or of drawdowns. And if your drawdown, if the drawdown amount that you're trying to avoid, like let's say it's 50R or 70R, if you can see that it's very rare that you would hit a 70R drawdown or a 50R drawdown, then you know you're onto something. And that's really the way that we should be looking at our strategies, is how likely, what are the probabilities of me having an XR drawdown? And the only way you can really do that I know of is to get your constant lot size. So you're not increasing your lot size as your account grows, but instead you're always risking the same amount. And then you run Monte Carlo tests and get distributions. And these distributions will show you that, yeah, about 20% of the time you see more than a 70R drawdown, or about 5% of the time you see more than a 50R drawdown, or whatever that level is. That's how you'll know whether or not you're likely or unlikely to hit your maximum drawdown level. It's a great way to figure out the validity of a strategy. And it's one that I definitely employ. And we're going to talk about it in Small Accounts, Big Profits. You can click the link below or above this video if that's something you want to get in on. So hopefully this helps. Again, remember, constant risk, assess the R drawdown, and the R drawdown, the likelihood of that R drawdown will tell you whether or not you want to trade that system. If you know that the likelihood is very low that you're going to hit your max drawdown, then this might be something worth investigating further. I wish you very happy trading, and I hope to see you in another video. Hope this helps. See ya. Bye.